You know, every trader remembers the first time they felt the market breathe back at them. That moment when the chart stops being lines and candles and suddenly becomes something alive. And today, we're talking about that very first step toward mastery, profit from the first trade. And just like in the previous video on the 3 hidden levels that decide if your trade will win or lose, this idea is part of the same long road of learning how the market really behaves. Now let me tell you something in plain language, the way I've always said it. The first trade isn't about hitting it big. It's about proving to yourself that you can operate with discipline, with clarity, and without fear. You may be thinking right now, shouldn't I be aiming for a strong start? Sure, a strong start feels good, but a sensible start keeps you alive. If you try to grab profits the way a starving man grabs bread, the market will shake you off quickly. I've learned that the market pays the trader who approaches it like a craftsman, not a gambler. When I talk about profiting from your first trade, I don't mean bagging a fortune. I mean entering a position that aligns with logic. Your logic, built from studying the tape, the trend, the volume, the levels. If you haven't earned your understanding, the market will simply take your money as tuition. But if you've put in even a modest amount of real study, that first trade can show you what it feels like to act on reason instead of impulse. Tell me, how many times have you jumped into a position just because the chart looked hot? Most traders do, and most traders fail. The market rewards patience. I've always said, the big money is in the sitting. But before you can sit, you must learn to stand still. That first trade should be a test trade, a trade that proves you can wait for the market to come to you. Because if you can't wait, you'll never profit in any lasting sense. You'll be a slave to motion, and motion alone won't make you money. Price moves all day long, but profit only exists where reason lives. And you know this already if you watched the previous video. Those hidden levels we talked about aren't tricks or secret formulas. They're simply places where the market reveals its intentions, if you're quiet enough to see it. The first trade worth taking is the one where those levels line up with your understanding of trend and timing. A proper trade doesn't shout at you, it invites you. And when you learn to listen, you'll start to feel when the odds are leaning in your favor. You should ask yourself right now, do I deserve to profit from my next trade? It's a harsh question, but it's necessary. The market isn't your friend, and it certainly isn't your enemy. It's simply a mirror. If you bring recklessness, you'll get chaos in return. If you bring preparation, you'll get clarity. If you bring discipline, you'll get opportunity. And sometimes, opportunity turns into profit. But profit is never owed to you. You earn it by what you bring to the table. A trader must think in probabilities, not hopes. Hope is for gamblers. Probabilities are for professionals. You should never place a trade because you feel like winning. You place it because the chart shows a clean setup, a decisive trend, a reaction to a level you've identified. Remember, the market doesn't care about your feelings, but it will pay you for your understanding. And that first profitable trade, even if it's small, teaches you what real understanding feels like. Back when I was learning, I'd watch the tape for hours. I wasn't waiting for excitement. I was waiting for logic. I wanted to see that moment when the market reveals a shift, when price, volume, and behavior all point the same way. That's when you strike. You don't strike because you're impatient. You strike because you're ready. Ask yourself, am I acting out of readiness or restlessness? It makes all the difference in the world. The thing about the first trade is that it sets the emotional tone. If you rush it, you'll build a habit of rushing. If you chase, you'll build a habit of chasing. And you'll spend the rest of your trading life trying to undo the emotional scars of those early mistakes. But if you move carefully, if you take that first trade the way a craftsman makes his first cut, then you give yourself a foundation that doesn't crack. A good foundation is worth more than a quick profit. A quick profit without discipline becomes a curse. You think the market is easier than it is, and the market punishes those illusions with precision. Some traders tell me they want to make back everything they've lost. I tell them to forget that thinking completely. The market doesn't pay you because you want something. It pays you when your analysis, your timing, and your execution align. That's why today's topic still links back to the ideas from that earlier video. Those hidden levels matter because they keep you grounded in structure, not emotion. When you see a level hold, or break, or reject, you're no longer guessing, you're responding. Now, let me ask you something else. Are you willing to let a good trade come to you, even if you have to wait longer than you'd like? Your answer defines your future. Most traders aren't patient enough to wait for the right conditions. They want the thrill, not the result. But the market is a poor place to seek thrills. Seek understanding instead. When you understand, the first trade becomes a lesson, not a gamble. And as you move through your early trades, you begin to feel something change. You stop looking for excitement and start looking for alignment. You stop reacting to every candle and start recognizing the rhythm of the market. You stop chasing and start anticipating. And before long, you'll realize that the profit from the first trade isn't just money, it's confidence built on discipline. But that confidence must be earned, not borrowed. Let the market invite you. Don't chase noise. That single idea has saved more traders than any indicator ever created. Yet it's the one principle most beginners violate without even realizing it. When I say the market should invite you, I'm talking about the quiet clarity that appears when price, behavior, and structure line up in a way that makes sense. It's a moment that doesn't feel rushed, doesn't feel forced, and doesn't seduce you with excitement. It just fits. And if you've traded for any length of time, you know how rare that feeling can be. But ask yourself, how many times have you taken a trade not because the chart was clear, but because you were tired of waiting? Noise is the constant chatter of the market, the random wiggles, meaningless candles, unpredictable spikes, and those sudden bursts of activity that look important but dissolve into nothing. Noise is what seduces impatient traders. It whispers, "You're missing something. Act now." And if you don't have the discipline to separate noise from real opportunity, you'll be stepping into trades that had no business being touched in the first place. Have you ever jumped into a trade simply because the chart looked busy? Most traders have, and most traders regret it. When the market invites you, it won't come through drama. It appears through structure. Think of a level that the price respects not once, but multiple times. Think of a trend that holds firm even as noise tries to break it. Think of volume that confirms behavior rather than contradicting it. These little confirmations, these subtle signals, they're the market quietly opening the door and saying, "No, the odds tilt a little more in your favor." But most traders don't wait for this. They chase motion, believing that if the market is moving fast, there must be opportunity. That's the trap. Market noise can look like momentum, but momentum built on nothing collapses quickly. And when you're trading based on noise, you're no longer operating from strategy. You're reacting emotionally. You're trying to catch something you didn't analyze, something you didn't plan for, something you didn't earn. And the market rarely rewards that kind of behavior. A disciplined trader learns to sit still during noise. Sitting still isn't easy. The hardest part of trading isn't pulling the trigger. It's not pulling it. It's watching candles form and dissolve without letting impatience dictate your decisions. It's letting a setup fully develop instead of trying to predict what the next candle might be. It's resisting the urge to act simply because you want to feel productive. The market doesn't pay you for activity, it pays you for accuracy. Have you ever noticed how the best trades often feel strangely calm? There's no adrenaline, no rush, no internal pressure. That's what it means to be invited. The chart presents something clean. A level holds with conviction. A breakout forms with structure behind it rather than noise pushing it. Every part of the setup aligns without you having to force anything. When you find yourself straining to justify a trade, that alone is a sign that the market hasn't invited you yet. Noise, on the other hand, creates emotional impulses. It makes you feel like you're falling behind. You see a sudden pop in price and think, "I'm missing it." But ask yourself honestly, Were you tracking that area? Did you understand why price moved? Did you have any context behind it? If the answer is no, then stepping into that move is like jumping onto a train without knowing where it's headed. You may catch a lucky ride once or twice, but luck is not a strategy, and it never lasts. Letting the market invite you also means respecting your own rules. Every trader should have a checklist, maybe not written out, but at least mentally. Does the trade align with the trend? Does it respect the levels you've marked? Does the volume confirm the move? Is the overall structure clean or chaotic? If you can't answer those questions comfortably, then the market is not inviting you. Chasing a trade that hasn't met your criteria is chasing noise, pure and simple. Another thing to understand is that the market invites different traders at different times. A setup that's perfect for a trend trader may not suit a reversal trader. A position that looks clear on the 1-hour chart may look like noise on the 5-minute. That's why you must know your own method. Without a method, everything looks like opportunity. With a method, most things look like noise, and only a few setups stand out as true invitations. There's a shift that happens when a trader starts respecting invitations instead of impulses. You find yourself taking fewer trades, but better ones. You spend more time waiting and less time repairing mistakes. You recognize that boredom is not a threat, it's a filter. Noise becomes something you observe, not something you react to. And slowly, your trading becomes quieter, calmer, more measured. You move from chasing the market to reading it. If you think back to the principles covered earlier, especially those hidden structural elements that shape a trade's direction, you'll notice that the market's invitations almost always appear at those areas. Noise can dance anywhere on the chart, but real setups gravitate toward meaningful points, levels, trends, zones of reaction. That's where the market speaks clearly, and if you're paying attention, that's where patience turns into opportunity. When you begin to see the market this way, the idea of chasing noise will feel as reckless as driving blindfolded. You'll want clarity. You'll want structure. You'll want the market to show its hand before you show yours. And slowly, trading stops feeling like a chase and starts feeling like a conversation. One where you only speak when the chart says it's your turn. Start with a trade built on logic, not excitement. It sounds simple, almost too simple, but it's one of the hardest lessons a trader has to learn. Most people don't fall into trouble because they lack indicators or sophisticated strategies. They fall because they act on excitement. Excitement is the enemy of clarity, and clarity is the only thing that keeps you alive in this business. When I talk about starting with logic, I'm talking about stepping into the market with a plan that makes sense even when your emotions want to drag you somewhere else. Think about it. How many times have you taken a trade just because the chart looked lively or because the candle moved fast? Every trader knows that feeling. The market starts speeding up, price bursts through a level, and suddenly you feel this surge to jump in before you. Miss it. But that's not logic. That's adrenaline disguised as urgency. Logic doesn't rush. Logic doesn't chase. Logic waits for confirmation. It waits for structure. It waits for the moment when price action aligns with the evidence you've been tracking. Excitement says, "Go now!" Logic says, "Go when the conditions make sense." Which one do you think the market rewards over time? A logical trade begins long before you enter. It begins with preparation. It begins with charting your levels, reviewing your trend, understanding the broader context. It means looking at the market not like a gambler scanning for thrills, but like a craftsman observing the materials in front of him. And if you're honest with yourself, how many times have you taken a trade without doing that work? The market exposes those shortcuts brutally. When you jump in blind, the market doesn't punish you because it's cruel. It punishes you because you didn't give yourself a fair chance. Logic protects you from emotion, and trading is a battlefield of emotion, fear of missing out, fear of loss, impatience, greed, frustration. When you trade based on excitement, you are volunteering to fight with all of those forces at once. That's why your first trade, or any trade that matters, must be rooted in logic. Not hope, not hype, not impulse. Logic. Logic makes you ask, Where is price going? Why is it going there? What structure supports this move? What structure contradicts it? If you can't answer those questions clearly, you have no business taking the trade. The funny thing is, excitement feels good, right until the moment it costs you money. Logic may feel dull at first, but dull trading is profitable trading. You're not here for entertainment. You're here to build something. You're here to understand the way price behaves, the way levels interact, the way trend shapes probability. When you start your trade from logic, you're respecting the realities of the market instead of chasing some fantasy of instant gratification. The moment you slow down and let logic lead, your entire trading behavior changes. You stop jumping into trades early. You stop taking random setups. You stop chasing every candle that moves faster than the last one. Instead, you begin waiting for the setups that truly align. You start seeing that clean structure, higher lows forming consistently, or a resistance level holding firm, or volume confirming direction. Your trades become deliberate, and that shift alone can change a trader's entire future. You might be surprised how much profit grows from simple, logical decisions. A logical trade is usually a clean trade, and clean trades tend to be the ones that move smoothly. Have you ever noticed how the trades you forced to satisfy excitement are the ones that get choppy, sideways, frustrating? That's because excitement leads you into noise, not structure. A logical trade, however, begins from structure. When you trade from structure, the market doesn't have to go in a straight line, but it often behaves more predictably because you entered where the probabilities were higher. Ask yourself right now how many trades in the past week were truly logical. How many were backed by a clear plan, a clear level, a clear reason? How many were simply reactions to movement? Most traders, if they're honest, will admit that many of their losses came from trades they took because they felt like it. But the market doesn't care how you feel. It cares how you think. It cares how you prepare, and it rewards the trader who respects that. Logic also gives you confidence, not blind confidence, but earned confidence. When you know why you entered a trade, you're less likely to panic when price wobbles. You're less likely to close early out of fear or hold too long out of greed. A logical trader understands the conditions that make the trade valid and the conditions that break it. That clarity makes your trading calmer. You stop guessing and start reacting with purpose. And when you trade with purpose, you trade with power. There's another thing about trading with logic: it keeps you from over-trading. Excitement whispers that every moment is an opportunity. Logic reminds you that only a few moments are worth acting on. Most of the market's movement is random noise, and noise is a trap. Logic waits for alignment, trend, level, confirmation. When those three things meet, logic sees opportunity. When they don't, logic sees danger. And that simple distinction alone can save you from dozens of unnecessary trades. When you think about the earlier lessons involving structure, especially the idea that hidden levels shape the market's behavior, you'll notice something important. Those levels only matter when you approach them logically. A trader driven by excitement sees a level and assumes it's a signal. A trader driven by logic sees a level and asks, is the market respecting this or rejecting it? Does this level align with the direction? Is there strength behind this move? Logic interprets. Excitement assumes. When you start with logic, your trading becomes grounded. You begin to see the market differently, not as a playground, but as a landscape with rules, rhythms, and signals. You realize that a trade taken with excitement may give you a thrill, but a trade taken with logic gives you a foundation. And once you build that foundation, trade by trade, decision by decision, you become someone the market can't shake so easily. A small, clean win is better than a rushed, big attempt. That idea may sound modest, almost too cautious, but it's the foundation every real trader eventually comes to respect. In the early stages of trading, most people walk in with the wrong expectations. They want the big move. They want the dramatic home run. They want the kind of trade they can brag about, and because of that desire, they rush. They force entries. They ignore signals. They cut corners. And the market, patient and unforgiving, teaches them that chasing size is the quickest way to shrink an account. but a small, clean win. That's different. That's where discipline is built, where habits take form, and where a trader's mindset starts maturing. Ask yourself honestly, how many times have you tried to take a large position or jump into a volatile setup simply because the potential reward looked exciting? A lot of traders fall into that trap because they think big trades equal fast progress. But trading doesn't reward excitement, it rewards consistency. And consistency begins with clean execution, not oversized ambition. When your focus is on getting one big score, you stop paying attention to the structure that actually supports profitable trading. You start imagining outcomes instead of observing the chart. You start trading fantasy instead of reality. A small win, on the other hand, forces you to operate with precision. It makes you choose your entry with care, because you know you're not trying to catch a huge move. You're trying to catch a correct move. That alone shifts your entire mindset. You begin valuing alignment over thrill. You begin valuing confirmation over urgency. And slowly, without realizing it, you develop an eye for quality setups rather than just big-looking ones. There's something powerful about ending a session with a small, controlled profit. It gives you clarity. It teaches you that you don't need a massive trade to feel steady. It proves to you that discipline works, even on a small scale. Many traders overlook this because they think small wins are insignificant. But small wins accumulated over time are far more meaningful than a handful of oversized attempts that usually end in frustration. You don't build mastery by swinging wildly. You build it by stacking correct decisions. A rushed big attempt is usually just that, rushed. There's no structure behind it, no confirmation, no patience. You jump in because you see movement and assume momentum will continue. But momentum without analysis is nothing but noise dressed as opportunity. And when you act on that noise, you're not trading, you're gambling. Have you ever noticed how the trades you force end up being the ones that drain you mentally? It's because deep down, even before entering, part of you knows you're acting without logic. Your emotions push you forward, not your understanding. A clean win, even a small one, does something different. It reinforces process over impulse. It shows you that your read of the market was correct. It proves that your analysis actually holds weight. That kind of confirmation is worth more than any big, lucky breakout because it strengthens your confidence the right way. Not through adrenaline, but through validation. And that is the kind of confidence that stays with you as your account grows. When you choose small, clean wins, you're also choosing patience. You're choosing to wait for setups that fit your criteria rather than stretching your rules to justify a bigger attempt. And this patience becomes part of your trading personality. It helps you see the market with a calmer mind. You stop needing the market to give you something extraordinary. You simply wait for the trades that align with your strategy and execute them methodically. Have you ever seen how professional traders operate during volatile markets? They don't chase the big swings. They don't jump in first just because price is flying. They watch, they observe, they measure, and they take the trades that meet their conditions, even if the move looks small compared to the chaos happening around it. Professionals survive not because they catch every big move, but because they avoid unnecessary risks. They're more concerned with being right than being dramatic. This is where wealth building habits truly begin. A trader who can consistently take small, clean trades is a trader who can grow an account slowly and steadily, and slow, steady growth compounds. It doesn't crash when the market turns. It doesn't rely on luck. It doesn't swing wildly based on emotion. It builds on itself day after day, week after week. That's how long-term wealth is made in trading, not through fireworks, but through deliberate, consistent execution. Think back to what you've learned about structure and key levels in earlier concepts. Those principles matter even more when focusing on clean wins. You're not looking for explosive moves, you're looking for high-quality entries. You're waiting for price to respect a level you've identified, or for a trend to hold with strength, or for volume to confirm the direction. These conditions create clarity, and clarity leads to clean execution. When your goal is simply to take a precise trade instead of a huge one, the entire process becomes calmer and more structured. A rushed big attempt usually happens when you're trading your expectations instead of the chart. You expect the market to move in your favor because you want it to. You expect a breakout simply because the candle looks large. You expect a reversal because price should turn here, but the market doesn't pay based on expectations. It pays based on alignment. And alignment is something you see clearly only when you're not blinded by the desire for a big win. A small, clean win also helps you preserve emotional capital. Emotional capital is just as important as financial capital. When you take a big, rushed trade and it goes wrong, it drains more than your account. It drains your confidence. It makes you second, guess your strategy. It tempts you into revenge trading, but a clean win, especially a small one, keeps your emotions stable. You walk away calm instead of shaken, and calm traders make better decisions. When you consistently focus on clean wins, you slowly build a psychological framework that makes you resilient. You stop needing the market to surprise you. You stop craving excitement. You start appreciating precision. And precision, over time, becomes profit. Not just random profit, but sustainable profit. The kind that grows your account, strengthens your mindset, and shapes you into a trader who lasts in the long run. The first trade should test your process, not your luck. Most beginners never understand this, and because of that, they walk into the market with the wrong expectations and the wrong mindset. They think the purpose of the first trade is to make money, to start strong, to feel like they're finally doing it. But the market doesn't care about any of that. The first trade is not a performance. It's a measurement. It's a way to see whether your preparation means anything when real money is on the line. If your first trade is taken to test luck, then you're gambling. If it's taken to test your process, then you're building a foundation you can rely on. And in trading, foundation is everything. Think about it. How many traders place their first real money trade the same way they clicked buttons in a demo account? They enter quickly, they chase something that looks good, or they choose a setup that feels exciting rather than one that fits their rules. The moment you bring money into the equation, your emotions change. That's why the first trade matters, not because of profit, but because of behavior. It shows you if you can follow your system when your capital is truly at risk. It exposes the parts of your process that are solid and the parts that fall apart under pressure. A process-driven first trade forces you to ask the right questions. Does the setup match your criteria? Does the trend support your direction? Are you entering near a level that matters? Is your stop placed at a logical point, not a random one? Are you risking a manageable amount? These are process questions, not emotional questions. Luck asks, what if this works big? Process asks, does this fit the plan? Luck cares about outcome. Process cares about execution. And execution is what creates long-term success in this game. Have you ever noticed how traders who rely on luck feel powerful after a big win and crushed after a big loss? That's because their emotional state is tied to outcomes they can't control. A trader who relies on process, however, doesn't feel shaken in the same way. They know that one trade doesn't define them. What defines them is their ability to repeat a reliable method. A process-oriented first trade is your first real step toward becoming that kind of stable, consistent trader. Your first trade should also reveal how honest you're being with yourself. Many traders claim they have a plan, yet the moment price moves quickly, they abandon it. They say they'll wait for confirmation, but they jump early. They say they'll risk only a small amount, but they increase the position size because the setup looks promising. When you take that first trade with the intention of testing your process, you'll see immediately if you are following your rules or just pretending you have them. And sometimes the truth is uncomfortable, but it's necessary. The market exposes weaknesses swiftly, especially psychological ones. If you enter a trade hoping for luck, you're already at a disadvantage. Luck makes you emotional. It makes you watch the chart with fear. It makes you chase price when it starts running away. It makes you hold losers because you hope they'll turn around. Testing your process, however, keeps you grounded. You entered for a reason. You know what invalidates the trade. You know when to stay and when to exit. You're not reacting emotionally. You're responding logically. A first trade grounded in process also sets the tone for your trading identity. Every habit starts somewhere. If your first behavior is reckless, you're building a reckless identity. If your first behavior is disciplined, you're building a disciplined one. Traders don't become inconsistent overnight. They become inconsistent one rushed trade at a time. And traders don't become professionals overnight either. They become professionals by repeatedly executing well-structured decisions. Your first trade is the seed of that pattern. What you plant there will grow. Testing your process also helps you understand where your strategy needs refinement. Maybe your entry criteria are too vague. Maybe your stop losses aren't well placed. Maybe your risk sizing is off. Maybe your timing is wrong. You won't truly know until real money forces you to see your behavior clearly. A process-driven first trade is like holding a mirror up to your trading habits.